In 2025, your credit score isn't just a number. It's one of the most powerful financial tools you have. With strong credit, you can access low-interest capital, launch a business, invest in real estate, and even earn travel rewards, all without touching your savings. Whether you're building wealth or growing a side hustle, knowing how to use your credit score strategically can unlock real financial freedom. We'll show you how to turn your credit into a true asset. How to turn your credit score into an asset in 2025. So before we start, make sure to hit the like button and subscribe to my channel. In today's financial ecosystem, your credit score is more than just a number. It's a gateway to opportunity. In 2025, a high credit score is not simply about getting approved for loans or credit cards. It's a financial asset that can be strategically leveraged to access capital, reduce costs, grow businesses, and build long-term wealth. With new fintech tools, evolving lending standards, and rising interest rates, individuals who understand how to use their credit, not just maintain it, are creating real financial leverage. Whether you're an entrepreneur, investor, or just someone aiming for financial independence, turning your credit score into an asset starts with education, smart planning, and execution. This guide explores how to maximize your credit worthiness in 2025 and use it as a launchpad to unlock wealth-generating opportunities. The modern role of credit in 2025. In 2025, credit plays a foundational role in both personal and professional finance. Lenders, landlords, insurance companies, and even employers use your credit report to assess trustworthiness and risk. With inflation driving up interest rates, having excellent credit has never been more important. A good score can mean the difference between a 22% APR and a 7% one. Over the life of a loan or line of credit, that difference can translate into tens of thousands of dollars. Moreover, strong credit opens doors to higher limit credit cards, 0% financing offers, small business loans, real estate investing leverage, and even reward programs that can supplement your income or lifestyle. In short, credit is capital, and when used strategically, it becomes a powerful financial multiplier. Understanding what makes a strong credit profile in 2025. The fundamentals of credit scoring remain relatively consistent. In 2025, the FICO and Vantage score models continue to dominate. Though they've been updated to consider new data like Buy Now, Pay Later BNPL history, and rental payment tracking through platforms like Experian Boost. The key components include payment history, 35%, always pay on time. Late payments, even by a day or two, can tank your score for months. Credit utilization, 30%. Keep your balances under 30% of your total limits, ideally below 10%. Credit age, 15%. The longer your accounts have been open, the better. Don't close old cards unnecessarily. Credit mix, 10%. A healthy mix of revolving, credit cards, and installment, loans, mortgages, accounts helps. New credit inquiries, 10%. Avoid too many hard pulls in a short span. Space out applications. In 2025, scores over 780 are generally considered elite and unlock the best financing options. Monitoring tools from Credit Karma, Experian, and newer apps like CFLNav and Tally help track and manage credit activity in real time. Using your credit score to access capital. Once you've established a strong credit score, the next step is using it strategically to access capital. This can take several forms. 0% APR credit cards. Many issuers in 2025 offer introductory 0% APR periods of 12 to 21 months. You can use this to finance purchases or consolidate debt without paying interest. For entrepreneurs, this is a cost-free loan when managed correctly. High-limit credit lines. Strong credit can lead to personal and business credit. Cards with $10,000, $50,000 plus limits. These can fund investments, product launches, or bridge cash flow gaps. Personal loans and credit unions. With excellent credit, you can secure low-interest personal loans from fintech platforms or credit unions. These loans can be used for down payments, consolidations, or business expansion. Business credit funding. In 2025, lenders like Fundbox, Bluevine, and Divvy offer credit to new businesses based partly on the personal credit score of the owner. Strong personal credit is a cornerstone of early-stage business financing. Peer-to-peer lending. Platforms like Lending Club, Prosper, and Solo Funds allow you to borrow directly from individual lenders at better terms if you have a high credit rating. By accessing this capital, individuals can pursue income-generating opportunities, improve their cash flow, or reduce high-interest debt, all by leveraging their score. Building wealth through credit arbitrage. One powerful tactic used by financially savvy individuals is credit arbitrage, borrowing money at low interest or no interest and investing it in higher return opportunities. For example, if you get a 0% APR card for 18 months and invest in a cash-flowing side hustle, digital product, or dividend stock, your returns can outpace your borrowing costs, which may be zero if paid off in time. Some entrepreneurs use this tactic too. Launch dropshipping or e-commerce brands. Buy and flip items using marketplace arbitrage. Pay for digital ads to scale proven offers. Fund home improvement projects that increase property value. In 2025, platforms like Kickoff, Grain, and Grow Credit also allow users to build credit, while using pre-funded digital credit lines, essentially creating a launchpad for higher limit borrowing. Credit arbitrage isn't without risk, but when executed responsibly, it turns borrowed money into a productive asset. Turning credit into business leverage. If you're a business owner or freelancer, your personal credit is often your first asset. Before you establish business credit, lenders and credit card companies will rely heavily on your personal FICO score. Use it to open business credit cards, EGG, MX Business Platinum, Chase Inc., Capital One Spark. Apply for lines of credit or SBA microloans. Build a Paydex score and DUNS number by paying vendors on time. Once you establish good business credit, you can begin separating personal and business finances. This not only protects your personal assets but opens up additional tiers of capital. With strong credit, some entrepreneurs access over $100,000 in business funding without collateral, fueling inventory purchases, hiring, or expansion. Apps like Nav, Tilful, and Brex now report to business credit bureaus, helping you scale your credibility with lenders. Credit hacking through travel and reward points. Turning your credit into an asset isn't just about borrowing, it's also about earning. Credit cards with strong reward programs let you generate travel points, cashback, and perks simply by routing spending through them. In 2025, travel cards from MX, Chase, Capital One, and Citi continue to offer 15x points on categories like dining, travel, and advertising. With strategic stacking of cards, it's possible too. Earn free flights and hotel stays. Offset business expenses with cashback. Access lounge passes, purchase protection, and extended warranties. If you're running a side hustle or business, putting all expenses on a rewards card and paying it off monthly can yield thousands in value per year with no interest paid. Tools like Travel Freely, Max Rewards, and Award Wallet help track point values and maximize redemptions. Credit score as a real estate tool. In 2025, the housing market remains competitive, but strong credit gives you the edge. A 780-plus credit score can lead to lower mortgage rates, saving tens of thousands over 30 years, better terms on rental property loans, approval for DSCR, debt service coverage ratio loans, where your credit and property cash flow matter more than income. Many real estate investors begin with owner-occupied properties, using FHA or VA loans with low down payments. With good credit, you can house hack, rent out part of your home, then refinance and repeat, building wealth through equity and rental income. Others use HELOCs, home equity lines of credit, to pull cash from homes for further investment, again possible only with solid credit. Protecting and monitoring your credit in 2025. Treat your credit like a valuable asset, because it is. Use credit monitoring services from Experian, MyFICO, or Credit Sesame Premium to stay on top of changes, prevent fraud, and manage identity theft. Freeze your credit when not applying for loans, and never co-sign unless you're fully willing to absorb the risk. Use secured cards to rebuild credit if needed, and ensure that every credit-related decision aligns with your larger financial goals. In 2025, AI-driven tools are capable of detecting anomalies and unauthorized inquiries faster than ever, giving you real-time control over your financial reputation. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.